The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box. I'm Karen Cho with Steve Sedgwick and these are your headlines. Tesla shares whipsaw after hours, falling after fourth quarter results miss estimates, but rebounding as CEO Elon Musk sounds a bullish note on the coming year.
When people look back on 2025 and the launch of unsupervised full self-driving, true real-world AI that actually works, I think they may regard it as the biggest year in Tesla history.
Microsoft falls in extended trade as revenue in its all-important cloud segment disappoints, while Meta catches a bid despite softer than expected guidance, as CEO Mark Zuckerberg defends the company's AI spending.
I continue to think that investing very heavily in CapEx and infra is going to be a strategic advantage over time. It's possible that we'll learn otherwise at some point, but I just think it's way too early to call that.
Well, we've got fourth quarter results hitting the wires as we speak from Deutsche Bank. They are crossing the wires with all eyes on whether the German lender can meet its full year targets. We're going to be speaking to the CFO, James von Moltke, at 6:30 GMT. And the Fed keeps rates on hold. They tweak the language on inflation, though. That's important. But President Trump, he has chagrin about it as well. Jerome Powell, though, saying he's blocking out any external criticism.
The public should be confident that we will continue to do our work as we always have.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
An American Airlines jet with 64 people on board collides with an Army helicopter in Washington, D.C., with a search and rescue operation now underway on the Potomac River. Right, I'm going to talk you through the numbers and I'm going to tell you a bit about the problem that German banking has. Now, these numbers from Deutsche Bank, the shares are up, I think, 17% so far this year. Like Commerzbank, they've rallied off their lows as well. The revenue figures in the fourth quarter, net revenues at 7.22 billion euros. That is versus 6.6 billion the previous year. Net profit attributable to shareholders, 2.7 billion euros. Analysts had expected that figure around 380 million euros for the fourth quarter. It's coming at 106. So, the numbers themselves, not particularly impressive at this stage. They expect provisions for credit losses to moderate from 2024 levels. That's really interesting given the malaise. We've talked a lot about the German banking system. But now targeting cost-income ratio of below 65% in 2025, slightly above the original target of 62.5%. That's a big question. Are the costs not under control? Now, let me get to return on tangible equity. I just want to mention this very briefly because I'm going to mention this because BBVA has come out as well. Why am I bemoaning the state of German banking? It's because of the profitability here and now. I'll do this very quickly for you, but I want to do it very importantly for you. The return on tangible equity at Deutsche after tax was 4.7%. Now, they're targeting above 10% for 2025, okay? So they're targeting above 10%. They're achieving 4.7%. And why do I mention BBVA? Why have I even mentioned a Spanish bank at the same time as I'm talking about a German bank? Because BBVA came out with their numbers 7 minutes ago with a return on tangible equity of 19.7%. 4 times as good as the German figure. That is common throughout a lot of Europe as well. Now, we had your cookies on our show with Karen and myself saying, but if we had the term, actually it wasn't your cookies necessarily, but other senior German people have been saying, well, if we had the same bond prices, we could make the same return on tangible equity. Really? You're blaming the bond market for the lack of profitability and lack of returns in Germany?
Right. I think there's a lot of spice, though, in these numbers. Look at the FIC revenues up 26%. That's decent when we talk about a tailwind. And, of course, the share distributions finally coming back after the Postbank issue that the bank had. So now we're talking about $2.1 billion in further capital distributions. And I think that's what a lot of investors have been looking for. Getting past legalities, there is actually some returns here for shareholders.
Yeah, I get that. But if you're not making more money out of the equity that you're putting forward to your various enterprises, at the end of the day, those distributions to shareholders are going to be limited. I have no idea where the shares are going to go. I don't know if they're going up, down, or sideways. What I am saying is the profitability at the German banks is woeful, which brings us back to the whole UniCredit Commerzbank debate, which we've had ad infinitum. Anyway, there's one man who perhaps is going to give you more enlightenment on this, way more than me, as you well know. The CFO, James von Moltke, 6:30 GMT. Annetta is speaking to him as we speak.
The stock up more than 60% over the past year, so it's been a decent run.
Well, yes.
Thanks to Andrea Orchel. Did Andrea do some of the heavy lifting there, do you think? Putting a
absolutely.
bid in the market?
He kicked them up the backside. Let's be brutally honest about it.
Put a bit of a takeover premium in the banks as well. Let's take a look at Roche as we push on to earnings. The company has announced proposing a dividend increase to 9.70 Swissy. Expects an increase in group sales in the mid-single digit range, and core earnings per share targeted to develop in the high single digit range. The company to further increase its dividends. Some of those outlook comments are just crossing the tape as we speak. When it comes to some numbers, I'm assuming we actually want to hear what some of the numbers are. The full-year sales grew by the group grew at 7%, I should say. It's got a bit of a mixed number here, and perhaps Carolyn can bring that to us. Q4 was the third consecutive quarter of 9% sales growth. Let's get out to Carolyn. She's been taking a close look at the numbers, and there's a string of them on the wires this morning. Carolyn, good morning to you. How is Big Pharma looking through the lens of Roche?
A Big Pharma through the lens of Roche. Good morning to you, Karen and Steve. Looking quite okay. These numbers seem to be in line with expectations or even slightly topping expectations. When you take a look at the full year number in terms of revenue, 60.5 billion Swiss francs in the year 2024. Analysts were looking for a print of 60.4 billion Swiss francs. They're also confirming their guidance for the full year. That was widely expected. They're proposing a higher dividend. That was also on the cards. Now, of course, there are a number of factors that are hitting Roche and that have been hitting the bottom and the top line over the previous years. And that, of course, Karen, is the strength of the Swissy that they're very much contending with. It is the base effects after the COVID pandemic. And of course, it is the loss of exclusivity for some of its key drugs. Also, the drug pipeline looks pretty uncertain. There have been a number of clinical setbacks last year for an Alzheimer's drug, for example. There's a new one in the pipeline. Whether that one can advance to clinical trials, later ones, that remains to be seen. And that's one of the key focal points for the investor community out there. So the drug pipeline, that will be keenly watched, specifically on Alzheimer's. Analysts out there believe this is a huge opportunity, could be worth $13 billion by the year 2030. And of course, Roche wants a big piece of that. Roche, of course, also wants a big piece of the obesity pie. It has a drug that's coming to the market, but not until the year 2029. And whether that's too late and whether that market is still lucrative by then, that remains to be seen. The other big focal point for investors when it comes to some of the drug makers in Europe, not just for Roche, but also for its crosstown rival Novartis, of course, is how do you deal with Trump and the new health secretary in the U.S.? A lot of pretty interesting questions to put to the CEO, Thomas Schinneke. That interview is coming up at 7:45 London time. Back over to you.
Carolyn, thank you very much. I think anyone watching the show so far can get the sense that it's a busy old Super Thursday with earnings crossing today. And we have the wash up, don't forget, from those big tech numbers stateside as Meta posted a top and bottom line beat in the fourth quarter, with revenue growing just over 20% on the year. But the tech giant's sales guidance for the current quarter was softer than analysts expected. Speaking after the results, CEO Mark Zuckerberg was bullish on Meta's AI prospects, saying he expects the company's AI services to reach 1 billion users this year. I think there was a lot of pressure on these CEOs yesterday on the back of DeepSeek. Now, Microsoft shares, as a result, fell almost 5% after hours, after revenue at its cloud computing unit grew less than forecast and the company guided to weaker than expected sales in the current quarter. Don't forget, this is the area that we're looking for, that AI boost at this early stage. So disappointing on that metric. CFO Amy Hood said the company sees capacity constraints in its cloud business continuing through the final 2 quarters of its fiscal year. Microsoft posted capex of $15.8 billion in the quarter, slightly ahead of estimates, but said it expects spending growth to slow in the next fiscal year. And Tesla was on the radar too. This is the stock and how it is trading in extended hours. Its shares whipsawed after the bell, initially falling after fourth quarter earnings and revenue missed analyst estimates. Operating income fell 23% on the year, with EV makers citing price cuts across a number of its models. However, the company said it expects to return to growth this year. And CEO Elon Musk told analysts that Tesla is planning an initial launch of its autonomous ride-hailing service in Texas in June, sounding a bullish note on the overall prospects for 2025.
2025 really is a pivotal year for Tesla. And when people look back on 2025 and the launch of unsupervised full self-driving, true real-world AI that actually works, I think they may regard it as the biggest year in Tesla history. Maybe even bigger than our first car, the Roadster, or the Model S, or the Model 3, or Model Y. In fact, I think it probably will be viewed 25 as maybe the most important year in Tesla's history.
Arjun joins us now. I think that was a very interesting comment from Elon about the most important year in Tesla's history. I do believe the company has been at a fork in the road around autonomous robotaxis in one direction versus what it's previously done in disrupting the vehicle market, not just EVs, but the overall car market. Now we have an intersection almost forming with White House over here, efficiency over here, SpaceX over here, robotics over here. It feels as though Elon Musk has been pulled in all different directions, and that could be having some blowback for Tesla.
Yeah, it was just such an interesting, it's a very unique stock, more broadly, Tesla. It's got a big mix of investors, some who believe it's the EV leaders, some who believe it's all about autonomy, some partly believe it's about digital currencies as well, and there was a little bit of everything for everyone in there. The core business really in the fourth quarter just did not shine at all. Margins were under pressure because of the price war Tesla's been in for a long time, particularly with the Chinese EVs. There was a top and bottom line miss. We haven't seen any new vehicles for a long time in terms of a mass market offering as well. So at its core auto business, it was very challenging. However, there was a lot of commentary, and we've seen this with Tesla over the years, forward-looking, that got investors excited, and why we saw that after hours pop. One, the company's expecting the vehicle business to return to growth in 2025 after a down year in 2024. They also reiterated that they believe they're going to bring out cheaper EVs in the first half of the year. They're on track for that, and that has been a key part of the story. The market wants to see mass market EVs. Thirdly, and I think this was a big part of it, the company said they're going to launch unsupervised full self-driving cars in June, some sort of robo-taxi service, a paid-for service as well. And they also said that they've seen some significant interest from car companies about licensing the tech, and this feeds into that narrative that others believe that Tesla's all about the autonomous piece of the puzzle. Yes, they're selling cars, but actually it's the software, it's the tech that really is at its core. And finally, Bitcoin, of course, reared its head in the earnings report. The company's saying they hold about $1 billion worth of Bitcoin at the end of 2024. This was because of a change in the way they accounted for the Bitcoin they hold as well. So something in there for those who believe in Musk and his digital currency journey as well. So it was everything but the cars.
And of course, Bitcoin went from here to the moon over that period of time.
Exactly.
And let's get to Steve Wesley, who is founder of the Wesley Group, former Tesla board member. Steve, great to catch up with you again. Thank you so much for joining us. Let me get into what we had, because I feel as though there's been a lot of star power around the stock, and this is thanks to Elon Musk's personal connection to the White House and to Donald Trump. And then there's the reality. We had a slight revenue miss here, and we've got a decline in profits year over year. What is the danger for investors holding this stock from here?
Well, look, I agree with Musk. This is a pivotal year, but if you look at Q4, this was a lackluster end to a challenging year for Tesla. Tesla missed forecasted revenues and profitability targets by a big margin. Revenues grew a tepid 1% year over year. This is a company that grew 71% year over year in 2021, 51% in 2022. Now is bare growth at all. Earnings per share down 22%. And it's all because of the sizzling energy division. And most people are investing because it's a car company, but it's their sales of gigapacks, 113% year over year growth. Most people didn't see this, gave them a slight top line uptick. The shocker here, auto revenue down 8% for the first time in Tesla history. Look, they still have a $1.2 trillion market cap. But the big question is, can they hold that without getting some new product into market soon and getting that often promised full self-driving vehicle in the market? These are some pretty big question marks.
Stephen, those question marks have been there for a while. I mean, you and I have had discussions about this before, and I do wonder what is the greatest threat now to the company. You've got competition thick and fast from the Chinese, BYD. The Europeans are trying to get back in the game, as well as any American company as well. So competition is coming very quickly. But you've also got this bromance with Donald Trump, and that has been a huge driver for the stock. I think we all believe that has been the catalyst. And of course, you've got changes to regulation around the environment and whether the robo-taxi is a success or a flop. So what is the biggest threat out of that laundry list?
Well, the good God, you've asked about 10 questions there, but I think here's the punchline. This is a make or break year. The good news is battery prices are dropping, and they're dropping quickly. They're expected to drop another 50% by 2030. The world's going all electric. 1 out of 5 of all cars sold in the world in 2024 were either battery electric or hybrids. And Tesla's kind of the name you know in that EV space. So there's a lot of tailwinds there. The flip side is they haven't launched any new products for a while. The Cybertruck's largely been a flop. They desperately need the new sub $30,000 Model Q in the market ASAP. And I want to do a full stop here. As you pointed out, compact market kind of meant $25,000 to $30,000. You're seeing the Chinese, the lowest cost battery producers in the world, bringing cars to market in the $10,000 to $20,000 range. BYD building plants in Thailand, South America, and now Hungary. Europe's about to see a tidal wave of low cost Chinese vehicles. And so this is all going to put pressure on Tesla. They got to get a low cost vehicle out. They've got to fix full self-driving. Elon's promises for the last 3 years in a row, they're lagging behind Waymo. So a lot of catching up to do. Again, saving grace, 113% growth in that energy division. Whoever's running that deserves a raise.
Steve, I've only got one question for you. Is Tesla worth 128 times forward?
Look, when you're growing 1% a year, that's awfully hard to justify. You know, I come from Silicon Valley. We have a lot of companies here with really high multiples, but they're by and large growing 20, 30, 40% a year. Look at NVIDIA. You've seen the numbers. And Tesla was right there in 2021 and 2022. I stood up and defended them and said, this company's got a lot going for them, plus the energy division. People scoffed. The problem is growth has slowed down. They haven't brought new products to market, and the products they have brought, like the Cybertruck, have just underdelivered. They've got to fix that. It seems here that there may be a problem of focus, and I'm sure the board will have some lively discussions about that going forward.
Steve, that was a lovely answer, but you didn't answer my question. Is Tesla worth $405 at 128 times forward PE? I think I know what your answer is, but just tell me, is it a buy, sell, or hold?
At 1% growth, I don't think it justifies that valuation. Now, Musk could prove us all wrong if he brings that full self-driving out in the first quarter or two. I don't see that happening. I don't think you're going to see the $30,000 car till the end of the year. I think they're going to have a hard time holding that value.
Steve, is Tesla a sell?
Oh, for me, it might be a sell for now, unless they can show some pretty striking results in Q1 or 2. We'll see.
Brilliant, Steve. Thank you very much indeed for that. Steve Wesley, founder of the Wesley Group. I love talking to you, as we always do. Thank you very much indeed. Former Tesla board member.
Coming up on the show, the Fed keeps rates on hold, drawing the ire of President Trump. We'll bring you the details. Plus, one central bank to another. ECB set to diverge with expectations for a rate cut today. And earnings season continues thick and fast. Shell numbers set to cross the wires in just under an hour. We're joined by the CEO, so on at 7:25 CT. Wait and see. That's the message from Jerome Powell, who spoke after the Fed pressed pause in its latest policy decision, keeping its target rate unchanged at 4.25 to 4.5%. Powell said the central bank needs to see the impact of President Trump's policy changes before it can even begin to make a plausible assessment on what the implications for the economy will be. In a move reflecting uncertainty over the policy horizon, the FOMC cut a line from its post-meeting statement that it had previously said it had made progress towards its 2% inflation goal. Well, the markets had everything yesterday, still trying to find some sort of a floor after DeepSeek. We had the Fed reaction and, of course, big tech numbers rolling across the tape late in the day. So the market pulled back, and you can see that element of caution, and that was right across the board from the Dow, the S&P to the Nasdaq. And Nvidia, though, worth noting, was one of the real underperforming stocks again. So despite picking up some steam after a big sell-off early in the week on the DeepSeek news, the Chinese tech found some action, but then again recoiled yesterday. So have we found a flaw when it comes to some of those big AI exposures stateside? US futures, what's in store for today as we chase reaction to a lot of those big tech earnings? We are seemingly propelled higher, particularly on the Nasdaq, chasing about 0.6%, Steve.
But Karen, don't you love a movie that is so brilliant that it has a subplot at the same time? And that was what it was with the Fed yesterday, wasn't it? You got the overall narrative, the plot line that even I can follow, but then you got the subplot between Trump and the Fed as well. So, US President Donald Trump lashed out at the Fed following his decision. What a statement, saying because Powell had failed to stop the problem of inflation, he would. Well, Mr. Powell, well, it says he addressed President's comments. He just really didn't want to get involved, did he? But anyway, he addressed the President's comments at the post-decision presser.
The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated this demand to you?
I've had no contact.
So the point being here is there's the overall narrative which we always look at with the Fed. Are they going to say anything different? Are they going to cut? Obviously not this time. That's the plot that we normally look at, you and I. But because we have, the news gods have been very kind for the next 4 years and given us Donald Trump, there's this other subplot. And even though, it's very difficult to have, if you and I didn't want to fight every day on our chats, it would be really rubbish. But because we both go into the ring, we're brave enough to get into the ring and have a go at each other every day on stuff, then there's an argument which gives the market a two-way view. In this one, you've got Trump versus Powell, but Powell's not getting in the ring. He's refusing to get in the ring and fight back.
Yeah, but who has the power structure here? And I think that's the problem. And we mentioned in that statement about fake climate change. That was what Trump was talking about. And the reality is a lot of the central banks have got into the game of looking at risk to the economy from climate change. They believe there's a genuine threat. And to have that sort of negativity thrown at the Fed around tackling climate change, I think that's one of the issues here, not just taking the US out of the Paris Climate Accord, but then actively throwing shade at institutions that are trying to do something to mitigate risk. Because I think there is a view that there are economic hits to growth if we don't tackle climate change.
Yeah. Should we put that board up again? What did he actually say? Because we didn't read the whole thing. It was amazing. I will read this. This is really important. Because Jay Powell and the Fed failed to stop the problem of inflation, I will do it. Okay, we've discussed that. And as Karen just said there, that if the Fed had spent less time on DEI, gender ideology, green energy, and fake climate change. Let me stop right there. And we'll come off that board. I've got one word for Donald Trump, and I don't know whether it's man-made climate change or natural climate change, but it is climate change. I've got one word, sir: California.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.